What's going on, y'all? So I kind of just wanted to make this video following up on yesterday's part one. We did a price action kind of like tutorial after the trade review yesterday. Today is Friday, November 14th. Yesterday was the 13th, obviously, and we did that. So what I kind of want to do is just show you guys the result of what I kind of was looking for in the markets. So if you look here, you're gonna notice that obviously we did end up making that low. So if you didn't watch yesterday's video, then obviously this one is not gonna make sense. So go back and watch yesterday's video. But price was around here yesterday when I made the video. And then we ended up closing at 25,000. Market closed at 25,000, and then we ended up pushing down another 460 points going into the lows here. Now, what I want to emphasize is how I knew price was going to do that, and basically how I want you guys to start looking at the market if you haven't found a profitable strategy just yet. I trade above pivot lows, I trade above pivot highs and below pivot lows, right? So wherever the market shifts direction, I'm trading above or below those levels. So basically, yesterday, the thesis coming into the markets was to trade below these four pivot lows here. So the minute we broke these four pivot lows around 25, 4, 4, 5, I was looking to take shorts at that level, and I was targeting the first target was going to be this pivot low, right? So we take the pivot lows here, we already wiped those out. So now we're under the buyers, right? Buyers are sitting at 25,460, 25,480, so on and so forth. All right. Once we take out those buyers, all we have is sellers left. So now we sell down to the next level of buyers, right? Buyers is this pivot low here. So I was gonna sell down here, take profit. Unfortunately, the market broke down a little lower than I wanted it to during pre-market, so I had to wait for a retracement. We went over that yesterday, so you guys can just watch that video. But basically, with what I was looking for coming into today, right, is we obviously broke down, right? We broke down to this pivot level here, right? This pivot level, very weak pivot level. So price didn't react too hard off of that, but it did just kind of consolidate after we got exhausted throughout the day. Now, if you finished yesterday's video, I said around, 12, 1 p.m. ish that we were going to make lows here. And how I knew that is because we were already below this pivot level here. And the next area of strong buyers was the 24,600s, right? 24,700s around there. So now that we are here, two things can happen. We can either continue breaking down, either doing a quick look below and fail, and we're going to pick back up, or possibly, we could just bounce here. But either way, it's not an A plus setup. This is kind of not within my playbook to trade, so I wouldn't recommend you guys, take that trade either because it's a little risky. Typically, what I'm looking for to decide to get an entry is going to be a clean break below pivot level, but the pivot level has to have high liquidity, right? So how can you know if the pivot level has high liquidity, right? See how these are like only two 1 hour candles? Price did not spend much time there, right? We're only getting like four 15-minute candles here. Price did not spend much time there at all, meaning that there's not really too much liquidity in those areas versus these pivot levels, right? Lots of liquidity, right? Lots of liquidity. We're seeing, you know, let me just count them out so I'm not guesstimating. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 15-minute candles at that pivot level. We have about four here, 4 or 5 candles, 15-minute candles there, and then we have a ton of 15-minute candles here. So realistically, those areas of liquidity are gonna be a lot more A plus and a lot more like high probability than trying to take a trade based off of a pivot level with no liquidity, right? So that's kind of where I'm getting that idea. Also, liquidity helps use as like basically something you can put your stop at, right? So yesterday I went over how I almost got stopped out. The reason I was able to prevent that is because my stop was above high liquidity. High liquidity prevents price from pushing back above that level so easily. So it helps you, be able to stay in your trades with a little more conviction. So just wanted to help you guys out with that. Something else I kind of want to go over in this video um, is going to be just like my TradeZella account. Just so you guys know that, I am actually like I do know what I'm doing. Obviously, I'm not trading with large size yet, kind of like I said yesterday. But in terms of the quality of my trades, they are improving a lot. And, I feel like I'm at a point now where I can start educating on this, especially for those who want realistic numbers, right? They want to hear from somebody who isn't necessarily a quote unquote millionaire yet, right? A lot of these gurus out here, they're trying to teach people that just feel like they're out of their league, and you guys can't relate to them, but you guys can relate to this, right? I made just under 200 bucks yesterday, and I'm also trading, consistently making $100 to $200 a day, right? 300, things in that range, right? Not not uh not really like unattainable for you guys, right? You get a regular job, you can put in $2,000 into your account, and you can start making $100 to $200 consistently every single day. Um, Also forgot to mention the reason why I'm not taking these trades is because I am on a smaller account size, and it takes a lot of capital to be able to trade out of session. Right. So if you guys have more capital, like any of you guys have more capital and you're able to take these trades out of session, definitely do so. But I'm just currently not at that position to where I can take these trades out of session without, using a significant portion of my account size. Um, it's roughly about maybe $100 on Weeble to get into a position, $100 to $200 to get into a position on MNQ on during session, and then it's gonna be like almost 3 grand to get into a position out of session during like the pre-market or post market sessions, like um you know the um the London session, and then also like those sessions are definitely, they're not as cheap to trade margin wise. And if your account falls below that at margin requirement at any point in time, they're gonna close you out of your trade, and then you basically just lost that trade, even though it never hit your stop. So I'm trying to avoid that, which is why I'm not taking these trades. But you're definitely free to do so. But anyways, um, based on where the market is right now, I am not really looking to take any trades today, based off of how it looks. Now, if you're wanting to play it risky, again, you could take shorts below this level to this pivot level here. But I personally am not going to be taking those trades because it's definitely risky. The liquidity is low down here. There's not a lot of there's not a lot of protection per se to protect your trade, because realistically, like, where are you going to put your stop, right? You get in, you're going to have to put your stop above that level. Chances are it's going to wick. Chances are price is going to go up here. So that's going to be a very, very wide stop for a very, very, um, so I'm going to just try to show you guys here. It's going to be a wide stop. That way you have to put your stop loss above liquidity. It's the only way it makes sense. The only way you have a shot at winning the trade. So you put it above these this pivot high here, this lower time frame pivot high, and you're basically going to be targeting these lows. It's not a horrible trade, but at the same time, strong buyers are here. So the chances we go down here aren't, the highest. So that's all I would say regarding that. But if you guys have questions about how I trade, how I actually come up with these trade theses and don't really understand, like let's say you're not understanding like the strategy, I guess 100%, definitely book a call. It's completely free. It's gonna be a 30-minute call, me just kind of helping you out. We can either go over your trades or we can go over my trades in a little bit more detail. Um, and and yeah, I'm just trying to help you guys out and kind of document my journey. That way, when I do get to that $1 million a year, that 100K a month, you know, the beginning stages are here, and you guys are able to relate to that. So, that being said, I am I think that's pretty much it. I will catch you guys on the next one. Peace out.